Hey folks, Dan Frio here with your market update for October 18th, 2024. So the reason why you're here is right through here. Mortgage rates. What in the heck's going on with mortgage rates? Well, they're basically flat right now. And they've been basically trading sideways over the last couple weeks on the trend of upwards. And that's what we don't like. But in today's video, we're going to talk about, it's going to be kind of a short one, is we're going to talk about right through here. The housing predictions. They're starting to come in. And I want to take a little bit of a dive into this one because we just had housing permits report out this morning. Housing starts, and they're pretty bad. Okay, I'll show you those in a second. But the reason why I brought this up is exactly that. House marking predictions, what home buyers and sellers should know. So let's go down through this caption real quick. We'll start with the highlights. Recent mortgage rates have been going down, but home prices remain elevated. Hopeful buyers should start preparing as early as possible, saving money and improving their credit. That's what we're trying to teach you on a daily basis. We're trying to show you how to save money because down below, I really get discouraged when I have people saying, Dan, I have no money. In today's economy, when you have the stock market and the equity markets hitting highs every day, you need to put a little bit of that extra money that you might have to work for you. And we're going to show you that. I'm going to start doing videos on the weekends and launching those out. So this weekend, we're going to do a broad scan of the market. What's the Dow Jones? What actually is it? What's an ETF? What is that exactly? And how you could possibly invest in AI right now. Maybe not with NVIDIA, but some other ways. And my goal here is to teach you how to do your research. So then when you start picking your own stocks and things, you'll know what you're doing. So that's what we're going to start doing on the weekends. I just don't have enough time during the day because I'm a mortgage loan officer and we're really busy. So that's where I'm going to start doing to help you guys out when it comes to education with your money. Okay, so let's go. And then the last thing is look into affordable mortgage programs and down payment assistance. I just posted a video yesterday and it's right through here. It's going to be the down payment assistance programs that we're offering. There's several of them. So I'll post that video right up through there. So when you're coming down through this, basically the data is telling us right through here. The average home value in the U.S. is $361,282. That's 2.9% higher than it was last year on average. Okay, you're going to have pockets of the area that are down in value, and you're going to have pockets of the area that are much higher than this 2.9%. But that is on average. Then you go down through here. The key influences of all this is low supply. Okay, so you have people stuck in rates, a rate at 3 or 4% that just don't want to move and refinance at these rates. So what are they doing? They're just staying put. Okay, so here's the problem. Affordability crisis. What's the culprit? Housing shortage worsens despite pandemic construction. When you go down through here, here's what we're starting to see. And guys, I just pick these data. You can do this same data research yourself. So watch with the people that cherry pick the data. Don't cherry pick the data. Just look at the averages. Then if you really want specifics on what your area is doing, we have a tool called Altos Research. Mike is a fantastic person. He actually created Altos Research. I think I have the link down below, but if I don't, check it out. What you do is you just put in your zip code and it'll tell you everything about your market area. So it's a fantastic tool. I suggest you using it, and I'll put that link down below. Okay, the national housing deficit, 4.5 million in 2022 and 4.3 million in 2021. So it's only getting worse. Okay, 2023 was the strongest year for U.S. housing completions since 2007, but 1.4 million additional homes aren't enough to fill the gap here. So that's what we're seeing right now. Go over to this thing. How short are we? Well, it's kind of in the consensus range, 4-5 million maybe. So the home builders are ramping up to do this, but on today's data, it doesn't look that way. So let's take a dive into the housing starts and or permits. And if you look at this data, it's kind of going the wrong way. Okay, so the first top of the heap, we got building permits. Last reading was 1.47 million. Supposed to come in at 1.45 million. Came in at 1.42 million. Short. Housing starts 1.36, expected to go 1.35, but it was at 1.36. We're at 1.35, going the wrong way. Housing starts previously up 7.8%, now nothing. So it's completely flat. So if we don't have more supply, we're going to have house prices continue to go up, up, up and away, even though the people are saying it's going to crash. Fundamentally, if you look at things, the market in historic values should have probably crashed in values. But we had where the Federal Reserve came in during COVID and bought up the mortgage-backed securities market. And guys, what I mean by that, when you're buying up the market, you're buying bonds. When you increase when you're doing that, you're increasing the prices because the federal government or the Federal Reserve was buying $40 billion a month of mortgage-backed securities. Okay, so let's get over to that so I can show you how this works. Here's a mortgage-backed security right through here, okay? And this basically determines what your mortgage rate's going to be. It's called the MBS. All right. So what happens is when people want to buy this stuff, they buy, what happens? It's like inflation when we want to buy stuff. It drives up the prices of things. So what the federal government or the Federal Reserve, my apologies, the Federal Reserve did over COVID is they're like, we got to do something to spur the economy. So we're going to basically just make interest rates zero. Okay. So that's what happened. So they went in and they started buying up mortgage-backed bonds, buying, driving up the prices, and the rates went down to I refinanced at 2.5%. So you have a massive amount of people in the economy right now that has a rate of 4 or less. So when you ask those people to say, okay, do you want to look, maybe to move and refinance a rate at this percent? They're like, no, because my house payment, even if I downsize, is going to go up. So that's the reason, or that's the issues that we have right now. So right now, though, we see the MBS market is up 10 ticks. It means mortgage rates might click down just a tad. Where are they going to go? Well, we might see 6.65 today, maybe. There's really no other economic news out today other than this calendar that we're seeing. There are a few Fed officials talking, and we never know what they're going to say. So we have right through here, I think we have Kashkarian talking, Bostic's talking today, Kashkarian's talking. So they're kind of at a neutral point. So I don't think they're going to come out and say anything really stupid, but what they're all going to say is we're not going to be as aggressive as we were at the past meeting. They're not going to cut 50 basis points again because the economy is just too strong, folks. If you look at some of the data right now, you have the equities markets, they're doing fantastic. Almost every day they're hitting a record high. Today, the Dow Jones is down a little bit, but look, you have green in the S&P, the NASDAQ, the oil's down. These are the top areas we look at. So we have S&P up, NASDAQ up, oil down, and the 10-year Treasury down. Fantastic afternoon. Go to cryptocurrencies. What are we seeing there? Bitcoin is at 68,000. So again, guys, over the weekend, I'm going to do that video to explain to you guys what all this stuff really means. So I hope you join on Sunday's video. Let's get over to some earnings beats or some of the news that came out today. Here's what I ponder. You got all these companies coming out with, I'll say, record earnings. And that means they're making more money. Is it because they jacked up the prices? So that's one thing. It's like, okay, inflation's coming down, but we were gouged so much. A lot of these companies are continue to hit record profits. Look at American Express. Let's see how they did. American Express profits rise. Okay, that's good right there. Let's go down through some of these other things. Netflix sees price hikes after its earnings beat. So they're killing it over at Netflix. So what are they going to do? Raise the prices because they can. And you go down through here, and that's what's happening in a lot of areas. People are buying this stuff and continue to buy the stuff, and the producers are like, I can just keep raising prices because I can. So that's the problem that we have right now. That's why you really need competition in all markets to bring an equilibrium to things. So here's what we're going to talk about over the weekend, the S&P. The S&P is killing it right now. If you put money in the S&P 500, here's the returns you got over time. 2024, it's up 23%. 2023, it's up 26%. 2022, if you were one of those culprits that like, okay, I don't want to buy a house because it might go down in value. Well, look at this. In 2022, you might have said, okay, the S&P dropped 18%. I'm out. It's going to lose money forever. So a lot of people are thinking about housing. You have a crash in 2008 to 10. Now that's historically, that's the benchmark that you have to go off of. So if you did that, you would have missed out on a 26% gain and a 23% gain. So you would have got about a 50%, or you would have missed out on a 50% gain. So those are the things I'm going to talk to you about. Berkshire Hathaway, what is it? It's a conglomerate. If you would have bought its stock, let's look at this thing. This thing is up here. I don't know if I can get it in my screen. It's up a 719%. You see it right over my head let's just see what's done over the last 5 years. Over the last 5 years, it is up 33%. Okay, I don't think that's right. 64% over the last 3 years. Okay, so you can see where this thing it's just taken off, but it doesn't, nothing goes a straight line up, especially when it comes to prices. So that's what we're going to talk about. What is my real role Well, I'm a mortgage loan officer, and I'd love to win your business. So if you're out there trying to buy that first house, maybe try to buy that first investment property, are you looking to refinance? Probably about a third of our portfolio right now is refinancing. People are going from 7.5 to 6.25, and they're saving a lot of money. So if you're out there, you're just trying to figure out a plan for yourself, visit us at therateupdate.com. There's a bunch of tools up top that you can use. If you're trying to buy that first house, I'd have you stop right here. Just go to therateupdate.com and just click the grant finder. It's going to find you grants. We are located in Illinois, and we have a grant of $1 million from the Federal Home Loan Bank of Chicago that we need to use. So if you're out there and you're in Illinois, the Chicagoland area, the culprit there is, or the conduit there is, you need to make $85,000 or less. Okay, that's usually the tickle point when it comes to the income. So check that out. And then if you're not in the Chicagoland area, but you're in anywhere out in the country, we handpicked 3 different programs right here for you. And you'll see what I mean by that when you click this national grant finder and get on your way. So other than that, if you want to reach out to us for some assistance, all you need to do is click the apply button. You'll be on your way. Or if you're like me, little impatient, I'm like, who do I call? So I scroll down to the bottom right through here, and there's our number, 844-775-5626. Or you can reach me directly at dan@therateupdate.com. So thanks so much for watching, guys. God bless. Have a fantastic afternoon. I'll be back at the closing bell to let you know how this mess ended for the day. Thanks a lot. See you then. Bye-bye.